Well, hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin. I am a professional trader and a programmer as well. If you guys are new, what I'm doing here, I'm looking at some good opportunities that may happen next day, as well as I am explaining some aspects of technical analysis and psychology of trading. So I hope after watching this video, you will go home with a little bit of knowledge received here. You'll become more experienced, more more skillful. Okay, let's start then. The first thing I am to analyze my higher time frame. My pair is euro-dollar, and then I switch to my trading time frames. My process of analysis is called IPDE process. And what this means? This means that on my high time frame I am to identify and predict what price is most likely to do next, and on my trading time frames I am to decide and execute the trades, decide how can I get involved and execute the trades. Let us start then. Well, clearly see the downtrend here. We have low, we have another low, another low, another low, and another low. You don't need, in this identification part, you don't need to go that far away. The minimum requirement for a downtrend is a low followed by a retracement and then a break of that low. So this is a minimum requirement for a downtrend. So you only need a low and lower low. So instead of this, and this, you only need to pay attention to the previous things, a low and a lower low. That's enough. So connect the lows and the highs to see that lightning structure, zigzagging structure, or whatever. So the second low should possess the candle close below the previous low. If we fail to have those candle close below, then we have a double bottom. If we only have spikes that are lower than the previous low, then we only have a double bottom. This is a reversal sign. But if we have a close below the previous low, then we have a break of structure, then we have an impulse lag to the downside, and we have a tendency, and you know that the tendency is more likely to continue than to reverse. Okay, hope you understand that. Let me zoom it in a bit. We had this low, previously broken resistance should now turn into a support. So we all know that our support zone starts here, yes, previously broken resistance, support should now turn into a resistance, and where it ends here. So the previous outside return is the zone, the resistance zone, where we will find our opportunities, Okay, so price is already entered to half of this zone, somewhere from this zone, maybe higher, maybe right now, or I don't know where. It will move to the downside. How can we make this zone a bit smaller? Because this is a very vast zone. To see that 368 pips, I want you to pay attention to these spikes. You see they acted as resistance here, and acting as a resistance here. So I would start my support zone from here. So, and the price shouldn't go very far away above that. So this is my resistance zone, major resistance zone. We can do it a different way, just go and run my fractal zones indicator. This is an indicator that I have drawn myself, and it shows support and resistance zones on my time frame. And as I told you, this is a valuable level here, from here, the beginning of our rectangle. we can start going to the downside from this border. Okay, let me delete the unnecessary stuff. It is intuitively clear that red rectangles we are to sell and green rectangles we are to buy. The identification part, that price will most likely move to the downside. At least we'll have some kind of bounce, not very large, maybe like this, not the continuation of the tendency, but still that will be enough to take some targets. Let's go to the 4 hour. So what I want you to pay attention is this double top. We made a higher high. Oh, not yet exactly. We didn't have a close above the previous high, so it's not a higher high. Technically, it is a double top as well. And look at this divergence. If we connect these highs, so we see a trend line moving to the upside, yes? And if we connect the corresponding RSI highs, we see the trend line is showing to the downside. This is called a divergence, RSI divergence. Technically, this is a double top because we don't have a candle close above the previous high. Okay, we have an RSI divergence, we have a double top, this large weird double top. Let's go to the next thing. We have another double top here. You see the spike is long enough to touch the highest close of this candle, so it enters the impulse highest border, but we don't have a candle close above the previous high, obviously, so we only have spikes. So this is a double top as well. And what I want you to pay attention to is the break of this double top's neckline. This is a neckline, I call it neckline. You see this neckline acted as support. It previously acted as resistance, and now it acted as support. So we have a break of that level. This is a reversal pattern called 2618. Okay, how the 2618 is traded? You just stretch your fibs, the previous leg, measure that, and you sell it at 786. Right now it is already running, so it is valid. The target is the retest of lows of that leg, not very big, and the stop loss should be at least 1-to-1 measured movement. Let me just clone it, paste it here. So the stop loss should go here, above the highs, 1-to-1 measured movement. This is the stop placement. You see, and this is the target, and this is the stop loss. At least 1-to-1. Okay, so the 2618 is on your radar. Let's go next. This is not the reason why I record this video. This is just another confirmation setup. But the setup I wanted you to show you today is 1 hour setup. Okay, let me delete that stuff. Boom, 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 boom. Double top, double bottom, not needed anymore. What I want you to pay attention is this formation. If we draw these legs to the downside, then we mark that correction, and then we draw the second leg that violates the previous leg. So you see it violates the previous leg. We have a kind of small downtrend, yes? So this formation is called a cipher pattern, and it looks this way. So the entry for that cipher is already triggered. Okay, the stop loss is here. 22 pips is your stop loss, and 22 pips is your target. You can trade it as a cipher pattern, yes, hunting those targets of 382 and 618. Well, cipher pattern is is one of the most high probability setups, so its win ratio is about 70%. Okay, so or you can use this cipher pattern as a reason for entry, yes, to see some extended targets of retest of previous lows or something like that. But in this case, you will need to place your stop above the previous highs. So if you end here, just measure your risk to reward. This will be your risk, something like that. And let's measure the reward. 1, 2, 3. Almost 3 to 1 reward to risk ratio. Well, that's it about the opportunity for the day. I will trade a cipher pattern as a cipher pattern, so a simple entry to the downside, simple exit at 382 or at stop loss. Well, you have to decide how will you trade that. You can also trade that 2618 on 4 hour as well. This 2618 setup. Well, if you like this video, give me your thumbs ups. Share this video on social media. Until then, good luck, good trading. Hope to see you soon.